I sold another part of my position in Palantir and it was definitely the right choice for me. But I also don't think that everyone should exit this position right now. Let's discuss the recent news and try to understand who should sell and who should stick around. In the end, I'll share how much I sold and for what price. Hey there and welcome to the Market Monkeys channel. It's Julia here and today we're taking a close look at Palantir Technologies, the stock that is up 150% year to date as a result of great performance and AI integration focus. Their AIP, artificial intelligence platform, has been the talk of the year in the integrative AI sector. Palantir recently got included in the S&P 500 and already being one of the top stocks in it. We see major differences in opinions among analysts and regular investors on what to do with the stocks of the company, so let's try to figure out who is playing against whom. A few words about the company. About 55% of Palantir's revenue comes from government agencies, with the rest coming from the commercial sector. They're actively trying to grow that commercial part and successfully achieving this. As for second quarter 2024, US commercial revenue grew 55% year over year. They offer 4 products: Gotham, Apollo, Foundry, and their new product that makes all of the buzz now, AIP. The last one, AIP or Artificial Intelligence Platform, integrates AI to boost decision making using large language models. Their unique proposition is the fact that this AIP artificial intelligence platform integrates AI into business operations very easy and very quickly. Palantir has already seen some big wins with AI, landing contracts like the extension of the Maven Smart system for 5 more years, bringing in around $90 million annually. A deal with the Department of Defense worth up to $480 million over 5 years. A $178 million contract for Project Titan, a battlefield AI system. From these contracts we can understand that their AI strategy is already paying off, but the real potential lies in commercial segment. And in the commercial segment they made some nice partnerships as well with the companies like Aramark, General Mills, CBS, Nebraska Medical and the Mount Sinai, where their AI tools have improved supply chain management, operational efficiency and even patient care. As a result of these successes, Palantir's valuation is unbelievably high and they'll need to close more and more deals just to justify it in the future. And of course, one of the most exciting news that we are coming to the earnings season, and Palantir already announced that results for its third quarter ended September 30, 2024 will be released on Monday, November 4, 2024, following the close of US markets. So I suggest that we take a look at the result expectations to understand what to expect from the stock prior to the earnings and after them. And right after this, we will discuss different scenarios for Palantir investors and what to do with the stocks of the company. So in their guidance for the third quarter, the management of the company said that they are expecting the revenues to be between $697 and $701 million. But because the company beats the expectations constantly, the analysts are waiting to see better results than in guidance, and the revenue estimate is almost $704 million. In general, in recent quarters, we noticed the skepticism of investors growing bigger and bigger, and when the company is beating the analysts' expectations and their own guidance, the stock often does not reflect such a great result. As for example, it happened with Nvidia last quarter. They've beat expectations, but not by as much as they beat the expectations quarter before that, and the stock actually dropped by around 8%. Palantir's management usually tries to be very precise in their guidance, and together with the fact that analysts are already expecting higher revenues, I'm afraid that Palantir will not be able to deliver much more than expected, and that already nervous because of the high valuation investors will send the stock flying down. EPS or earnings per share estimate is 9 cents, but here we can actually see that they got 11 positive EPS revisions in the last 90 days, and it is a very bullish sign. If you find this information helpful, you can help us as well by pressing a like button and subscribing to our channel. Checking earnings per share revisions before the earnings is very important because it gives you a sense of what analysts are expecting to see from the company. If analysts have been raising earnings per share estimates, it means that they're more positive about companies' performances, and it could lead to a positive surprise after the earnings are announced. But on the other hand, if estimates are being lowered, it could mean trouble ahead and that the stocks of the company could fly down after the earnings. Basically, tracking these revisions help us set more realistic expectations and to make our decisions based on more updated data than in guidance. So basically by this I'm trying to say that we are seeing not only very different opinions of people and analysts regarding this stock and regarding this company, but based on the numbers we can actually make very polar conclusions regarding of where the stock will go. Another pretty interesting piece of news is that Palantir Technologies stock got price target raised by 1 Missouri Mizuho analyst who has reason for optimism as Palantir's earnings are ahead. By the way, it doesn't mean that he thinks that investors should buy the stock. Mizuho analyst Greg Moskowitz wrote in a note on Thursday that software companies likely had a good quarter thanks to strong demand for cybersecurity and generative artificial intelligence. That, together with Palantir's steady rise, led Moskowitz to increase his stock target price. However, the new stock target price still implies a decrease from where the stock is right now. His price target went to $30 from the previous $24, which implies a 30% decrease from the stock's closing price of $49.92 on Friday. Together with this, Philippe Lafon's hedge fund, Coatue Management, sold its entire stake in Palantir during second quarter, unloading about 4.8 million shares. The fund likely took great profits given that they've been in sight for Palantir's strong run from approximately $8, if I'm not mistaken, since their initial investment. Another reason, of course, could be a concern of Palantir's high valuation. Palantir is trading at more than 100 times future earnings, which seems steep despite its AI-driven platforms. When a company is trading over 100 times future earnings, in simple words, it means that investors are paying $100 for each dollar the company is predicted to earn. Or it implies that based on the current stock price and projected profits, it would take over 100 years for investors to earn back their initial investment purely from the company's earnings, assuming that the earnings will stay the same each year. Of course, it's a very simplified way of looking at it, as actual returns would depend on other factors like changes in the stock price or changes in the earnings, but still, people, this valuation sound just ridiculous. And lastly, Lafon might be cautious about the possibility of an AI bubble. In general, when I researched the information for this video, I noticed that more and more people are actually concerned about the possibility of AI bubble. And of course, if it is a bubble, we would like to know about this before it bursts. So I basically googled what is the signs of a bubble, and oh boy, I was very surprised to find out that Palantir looks very much like a bubble right now. Listen very carefully, because in a minute or so you will understand it yourself. Economist Hyman Minsky was one of the first to explain the development of financial instability and the relationship it has with the economy. In his book Stabilizing an Unstable Economy, he identified 5 stages in a typical credit cycle, one of the several recurrent economical cycles. These stages also outline the basic pattern of a bubble, and spoiler, it looks ridiculously similar to what happens to Palantir and in general AI sector right now. So the first stage is called displacement. A displacement occurs when investors get fascinated by new paradigm, such as innovative new technology. I don't know how about you, but this sounds actually really similar to what was happening a few years ago to Palantir and AI sector. The second stage is being called the boom stage. During this stage, prices rise slowly at first, following a displacement, but then gain momentum as more and more participants enter the market, setting the stage for the boom phase. Fear of missing out on what could be a once-in-a-lifetime opportunity spurs more speculation, drawing an increasing number of investors and traders into the fold. Hopefully, I'm not the only one noticing a real similarity here. The third stage is called euphoria, and we are pretty much getting to where Palantir might be right now. During this phase, caution is thrown to the wind as asset prices skyrocket. Let's take a quick look at Palantir's graph. And here we can see that price did skyrocket. So valuations reach extreme levels during this phase, as new valuation measures and metrics are touted to justify the relentless rise. What can I say about this? We already spoke about valuation is being through the roof right now, but the phrase "as new valuation measures and metrics are touted to justify the relentless rise" have actually got me. In one of my previous videos on our channel, I actually said that there is no companies to compare Palantir to, and to compare Palantir's valuations to, I suggested that maybe when more and more companies like Palantir will enter the market, we will see that their valuation is actually higher than we are used to. If it's not making up the new valuation and new metrics, then I don't know what is. But it's not all. The greater fool theory is the idea that no matter how prices go, there will always be a market for buyers willing to pay more. I don't know about you, and if you don't agree, you can write about this in the comments, but I think that Palantir's recent surge in stock price actually very much feels like the euphoria stage of a bubble. The valuation has skyrocketed, with shares trading trading at extreme high multiples compared to the earnings. Just like in a classic bubble, the new metrics and valuations are being used to rationalize the steep prices. The excitement around AI makes people to invest more and more, pushing the stock price higher and higher. And in my opinion, we can see this greater fool mindset playing out right now. The fourth stage is profit taking. In this stage, the smart money or professional investors and funds hitting the warning signs that the bubble is about at its bursting point and starting selling positions and taking profits. So let's go and check what analysts are saying, and here we can actually see all of these warning signs. A lot of analysts are giving right now a Palantir a sell or a strong sell rating, and as we already mentioned before, some funds like for example QuadU Management are starting to exit their positions completely. But please pay attention to the next sentences because they will be very important. But estimating the exact time when a bubble is due to collapse can be a difficult exercise because, as economist John Keynes put it, the markets can stay rational longer than you can stay solvent. So basically, some people might say that we already see the characteristics of a fourth stage right now, and maybe they would be right, but it's almost impossible to predict if it's a bubble when this bubble will burst. And to understand what awaits us if it is a bubble, let's check what is the last stage, and the last stage is called panic. It only takes a relatively minor event to prick a bubble, but once it is pricked, the bubble cannot inflate again. In the panic stage, asset prices reverse course and descend as rapidly as they had ascended. Investors and speculators, faced with margin calls and plunging values of their holdings, now want to liquidate at any price. Hopefully we won't find ourselves trying to catch the falling knife, so not to come to that, I decided to sell another part of my position this past Thursday for $42. It was my second sale since the stock price started growing significantly, and I'm 100% sure it was the right choice for me. Wait, because in a couple of minutes I'll explain in what cases I wouldn't be selling the Palantir stock. So a few words, why am I selling? I'm selling not because I don't believe in Palantir, because I absolutely do. I have been in Palantir since their beginning on the stock market. I went with them through their major crash and never wanted out. I'm planning on holding stocks of this company for many more years. My average price in Palantir is about $22, I think. And before I started selling, Palantir was actually 60% of my portfolio and I was completely out of cash. So here we come to the reasons why I am actually selling. First of all, as a result of all of the uncertainties before the elections, major escalation on the Middle East that may or may not come to an ease after Israel killed most of the terror leaders, and ongoing war in Ukraine, I actually wanted to get out of some of my positions and to sit it out on a cash. Not completely, of course, but I wanted to balance this ratio of stocks to the cash that I'm holding right now. And it's basically because I already been in the unfortunate situation a couple of years ago when the stock market crashed and I simply did not have any cash to average down on some positions that I really like, including Palantir. That's why basically my average price in Palantir was pretty big, because when it was falling, it's not that I did not believe that they will come back. I absolutely did, but I did not have any cash to buy more stocks, and I don't want to be in this situation again. Another point why I decided to sell is the fact that for some time now I wanted to diversify my portfolio. I remind you, before I sold, Palantir was more than 60% of my portfolio. So basically for the last couple of months I had this idea of selling some part of Palantir, and right now it's actually a great opportunity to follow my plan and on the way make a nice profits. Now with my average price of more than $20 per share, I will be very fine buying the stock even for $30 per share. It won't change my average price by that much. But again, that's my story. I'm perfectly happy buying, selling and then buying back for a higher price. I will not be upset. If for example I would have an average price of $5, $6, $7, $8 and an ambition to hold Palantir stock for a very long time, and when I say long time I don't mean 2 years, I mean 10, 20, 30 years, I wouldn't sell. I would simply stop paying attention to anything that is happening right now because it doesn't matter. Even if Palantir is a bubble and AI sector is a bubble, it simply means that before they grow to these crazy numbers like the tech sector right now, for example, and it will grow to these numbers because AI is the future and AI is here to stay. Remember, for example, Microsoft during the dot-com bubble. The fact that the bubble had burst doesn't mean that we don't have internet companies anymore. And the fact that Microsoft was a part of that bubble doesn't mean that it wasn't a great company. In the same way, Palantir and AI sector in general might go through a pullback or bubble burst before making those great results. floats. Basically, it means that to see this growth that we would like to see, it will take a little more time than we're expecting right now, but if you're deciding to hold Palantir for another 20 years, it simply doesn't matter. Another quick thing that I want to mention, just for fun, about 10 days ago, I checked what is the short percent of float for Palantir, or how many out of all of the stocks of the company are being shorted. And back then it was little less than 3%, and right now is almost 5%. So since Palantir's stock price rose to be higher than $40, the amount of short positions almost doubled. By the way, median short interest for S&P, for example, is about 1.5%. So Palantir's short percent of float is more than 3 times higher. What to do with all of this information, as always, is on you. My job is to deliver interesting information or information that is often being missed out, and to explain my personal point of view. As always, write a comment so I know that you're real on that side of the screen. I hope this information was valuable, I hope this information was helpful, and if so, you can help us as well by pressing a like button and subscribing to our channel. I'll see you on our channel next time. Happy investing!